last week, and actually the last 2 weeks, I was making an argument for the oil to go to $60.
Mm-hmm.
And my argument here, both technical and macro. So let me talk about the technical, and then I'll kind of talk about the macro because it's more complicated than technical. The technical is pretty easy. Climactic run,
Yep.
stop in action, most important bar to the downside.
Indeed.
And then we have, this acts to me almost like a sign of weakness after this bar, and negation of the climactic run almost completely. So therefore, a short-term bearish bias or a bearish background. After that, everything is kind of very easy. Potential TP formation, distributional that is, where each attempt to rally is losing the steam and cannot overcome or even approach the buying climax high. Apex formation, which is very typical characteristically with lowering of the volume signature, where we have lowering of the supply, lowering of the demand. The question becomes of why. This question could be answered better on the macro perspective rather than on the technical. And I said that we are going to have, and I've shown this in classes, that we are going to have a local upthrust above the last attempt to go up. We were looking for this reversal bar, and this is it. So this is the call. From here, we might potentially go to where? To 60. Pretty fast. I would be expecting something like this, William, technically, and then go down.
Yep.
All right, so that's the technical part. Now macro. Because with the oil market, what I love about the oil market is that you could literally trade fundamentals in this market, the macro picture. There are different thoughts here. Well, first of all, Russia sanctions. So what does this lead to? This leads to the decrease of the supply. If this leads to the decrease of the supply, what should happen with the price, guys? A quick pop quiz question for you. If supply decreases, what should happen with the price? Okay, come on. Like, see, we don't ask them questions, so they're just like so slow. Yeah, it should go up. All right, so counterintuitive here, which is very, very interesting. Okay, so then, but the counterpoint to this is this. So again, Russia sanctions from the side of the coalition. The coalition is basically saying like, we want to ban Russian oil, but we can't because countries like I believe Hungary, not Hungary, some of the, let's say, Eastern European countries, Eastern Europe, plus Germany.
Germany, yeah.
Yeah, and Italy are from 60 to about 40 to 60, 65% percent dependent on Russian oil. So then third point, well, let's go to OPEC plus, and just say like, could you increase the supply? So US is going to OPEC and saying like, could you increase the supply? And OPEC is saying, if you follow oil news, which I do, and I've read on this a lot yesterday even, the OPEC is saying no. They marginally produced increase of the supply, marginally, right? So then US is saying, okay, you don't want to do this. You're saying no to me. Okay, I'm gonna do something that I've done in 1985, 86 to the USSR, the collapse of USSR. So I went that deep into history, William, and I looked at the chart. the oil went from around $50
Mhm.
to around $10, $12 in 3 months. What did they
Wow.
do? They basically went to Saudis and they said, oversupply the market, which they did. And there was the collapse like this. So a pure supply demand relationship. And that's why I'm saying that
Mhm.
oil market, you could trade on fundamentals. I mean, like if you truly deeply understand it, not just like, on the surface. And I think that this is the scenario that is going to unfold. Because for the European coalition to help out Ukraine and to sanction Russia more, and with understanding that this war is going to be prolonged war for different reasons, I'm not going to go into the reasoning. I did this last week. So if you guys want to listen to the reasons of why U.S. will be pressuring, OPEC and increasing the production as well. By the way, some of you are saying like, oh, okay, well, what about Canada? What about Iran? What about like, this and this? Well, there are problems there. For instance, Canada would want to increase, and they, by the way, they've increased their production by 19. No, that's Norway, I believe, increased the production by 19% in the last 3 years, which is unbelievably high. But Canada is at the capacity. They are building the pipeline right now. They just don't have the capacity to increase the oil supply and gas supply right now. Maybe within 2 years, yes. So, and you have to do it now because the European coalition, the war coalition, depends on this. So what do? You force your hand with the Saudis and with other countries like Venezuela, and you force them through drumsticks here, right? Collapse of OPEC, announcing that OPEC is the monopoly, which it is, a global monopoly on oil and gas. And with that, that would be kind of like a stick and not a carrot. So if the carrot doesn't work, then we're going to go to the stick, right? So that's kind of like the geopolitical history dictates that this would be the next move. Once that is done, then the Saudis prince is gonna probably try to secure the security blanket for himself and the position in the Middle East that he's got and the country has, and then from that oversupply of oil will come, and that's why the price of oil, like in 1985 and 86, will collapse pretty fast into the end of the summer, into 60, between 40s and 60s. Why 40s and 60s? Because this is where the cost of fracking companies in the US is for being profitable. They can't go below this. If they go below 40, those companies are going to start going bankrupt. But being between 40 and 60 is kind of like a sweet spot for the US from multiple perspectives. Domestically, there's still enough, fracking that's going to go on. It influences the inflation. Think about the inflation, right? What would that do for the inflation? Oil-related products are responsible for 30% of the inflation. Inflation goes down, the Fed starts thinking like, if inflation goes down so rapidly, why do I need to increase the interest rate on the background of the recession that is developing already and the market tanking? So everything is so interconnected suddenly. And then with that, the war coalition is still intact.